All right, guys, back to work. Boy, fantastic job today, first of all. These are not easy markets right now. So if you're making money out there today, well done. Let's keep it going, keep it rolling in for tomorrow. Now, speaking of tomorrow, we have the CPI report tomorrow morning. You know we're going to get some fireworks around that CPI report. We have a beautiful range that showed up this afternoon. I love ranges. You should too. We'll talk about why tonight, but it looks like breakouts, fake out breakouts, breakout pullbacks. We have a lot of trades on our radar as we get ready for what should be a pretty volatile reaction to that CPI tomorrow. So charts are ready. I'm glad to have you back here once again tonight on the video. So enough of the intro. Let's go find some more winning trades, make some more moolah on what should be a very busy Wednesday morning. S&P and SPYs already. You can see NASDAQ triple Qs are already in front of us. I have three very simple but very important clues that are tipping me off to where I think the winning trades are waiting for tomorrow. One of those big clues is right here on these hourly, these 60-minute time frames in front of us. Well, we got that breakout pullback that we talked about in last night's video 24 hours ago. Breakout pullback off of that trading range. And it's important to remember right now that that range above us on both the S&P and the SPY and the NASDAQ triple Qs, the buyers are trying to go back up into that range because ranges act like magnets. But the one thing I want you to remember right now is that, and we talked about this last night, that strong run down that we saw, late last week, right into that non-farm payrolls, that strong run down, it's going to want to retest that low before we get any meaningful run back up into that range. So the buyers know exactly what they want right now. They want to go back into that range, but the sellers, they're still trying to take out that unfinished business and tag that low. So that's one very big, kind of bigger picture clue on the hourly charts. Now, I have two probably more important clues on some faster time frames, some tick charts. Those clues will help us time the entries for tomorrow. You'll see that range I mentioned there a few moments ago. Before we dive into the tick charts and talk entries though, let's check schedule because again, tomorrow's, it's not your average Wednesday. We have what could be what is easily the biggest report of the week this week. And we know that everyone, well, at least most of us, are kind of on the edge of our seat right now, waiting to see if that CPI report will be above or below expectations, because we know that the Fed will probably decide whether or not they're going to cut rates at all this year. Right now, I believe only a 22% chance for a rate cut this year. And so, boy, that CPI report could have a domino effect for the rest of the entire year here this year. So you can't even state how important that CPI report is. And again, there'll probably be some fireworks, some volatility around that tomorrow. So we're not going to talk about if it's higher or if it's lower tonight. The game plan tonight is get ready for some volatility and put together some if-then scenarios. That way everybody has a roadmap. No matter what that number comes out tomorrow, we'll have a roadmap to make some money no matter what happens. So back to our charts though. Let's dive into some tick charts right now because the hourly charts are good. I like to use the hourly charts as kind of an overall bigger picture, but the money is really made here on the tick charts here. Upper left-hand corner, by the way, if you're watching for the first time right now, these are all tick charts. You can find time frames, upper left-hand corner. And the only indicator I use to find winning trades is that 21 EMA, in case you guys are tuning in for the first time here tonight. There are two really important clues here on the tick charts right now. One clue is that bull run up into what ended up becoming a trading range right around that breakout pullback zone if you watched last night's video. Now, if you're taking my free video classes right now, you know that ranges love to rotate. They go up, down, up, and they're going to want to rotate now roughly about the amount below, up above. So a lot of potential for a really strong kind of slingshot move as it rotates higher. That's one very big clue and will make the job of the sellers quite difficult as we go higher. But what might be the bigger clue here is in our members trade room every morning at 8 o'clock Eastern time, we always talk about how whenever we see big moves or strong moves in both directions, strong move down, strong move up, strong move down, strong move up, whenever we see these big moves back and forth like that, it usually means there's a range that's coming. Now ranges, they love to rotate. They act like magnets. We rotate down, up, down, back and forth, right? Kind of buying low, selling high, and potentially, because we have the CPI report tomorrow morning, I would imagine some breakouts of that range are going to be where the money is made. Breakout pullbacks, and of course, fake out breakouts. Now, when you think about that bull range and that rotation, I have a number of trades I'm tracking if we go higher here right now. But let's talk about that a bit later on in this video, because what should happen is, and again, I have no crystal ball for tomorrow, so we'll go over some different game plans tonight. What we should have happen is a rotation back down again. So down here, remember where we are right now, right? There's that big, strong move low we mentioned earlier on the hourly charts. So if we end up going lower right now, that range above us is a magnet. This is a very difficult place to want to sell, right? You're selling very low at key support levels with a range magnet. So there's lots of ways in which we can make money if we do end up going lower. For example, if I run lower, we're overall bearish on the hourly chart, so momentum will be pretty bearish going lower. I'd like to buy down here just because it's not a great spot to be a seller that low with that range above us. The problem is I'm not going to try picking a bottom, right? That's just suicide these days. What I'll do is I'm going to look for a pattern I call a crown reversal. I know a lot of you guys love this pattern. It's very simple. It's basically a bear trap. I want to see bears try once. I want to go higher. Bears try twice. Higher high, get right below that low, nice strong green candle, and that's your signal now running higher. Now remember, we know where the market wants to go at that point. It wants to go rotate back up and take out those highs. That's our target. On the way back up to those highs, what you want to do now is look for what is basically a technical bear trap. I teach this in more detail in the free video classes, right? It's very simple. It's a higher high in price and it moves right below that low. Now, if you look closely at this, these are the exact same pattern. I call these crown reversals. They're basically bear traps, a reversal variation of this. Most people can pick up on the continuation pattern easier, right? That is again, a bear trap. Higher high in price, move right below that low. Crown reversal into bear trap as it rotates off of that low. Now, keep in mind, remember, tomorrow's CPI on Wednesday morning, so there's a good chance we'll get a very strong rundown. If it makes a real strong run down, remember, anytime we see a strong move in one direction, they're going to want to pull back, retest that low before we get that run going higher here. So do not be surprised tomorrow if we see that strong shot down. We may or may not get that crown reversal pattern for the buy going higher, but don't be surprised if we pop up and all of that momentum off the CPI report rolls back lower and takes out that low. Now, remember, anytime we see double tops, double bottoms like this in a range environment, these are excellent areas for another bear trap. Now, the good news is I can be a lot more aggressive on a retest trade. In my trade room, we call these retest trades, right? Is you're buying the breakout and then buying that retest. When you're buying the retest, I don't have to look for that crown reversal pattern. I can use what is basically what I call a two-try failure. I'm not going to pick a bottom on this because, again, that's not a professional's trade. I'm going to wait for those bears to try once, let them try twice. Now think about this. If you're caught short right there into all that big time support range above us, your stops are sitting right above that high. That is why I love crown reversals. That's why I love failure patterns, because it squeezes those stops. And again, I call these failure patterns in our free video classes. And then as we're running higher, what's the add-on? Remember, if you want to make more money, add to your winners. Higher high in price, get right below that low. It's a two-try failure. Trap those bears in, squeeze those stops, and then as it runs higher, as they try to rotate back to the side of that range, it's always going to be the add-on trade is that bear trap. Now, I want to talk about a couple more variations of this because we may not get this. It may V-bottom off that low. I want to talk about that. And who knows? This thing may bloodbath tomorrow. If that number comes out highly expected, it may really dump going lower. I've got a couple more examples and variations of this. We're going to game plan. Before I do that though, let's slow down for a few moments. I know most of you folks watching right now, you know these patterns. You're making money on these. I got so many great emails and comments today. But if you're watching for the first time right now, this might be a brand new language, a brand new strategy. What the heck are these patterns? Don't you worry. I teach the entire system. In fact, I have a ton of examples, crown reversals, failures, bear traps. What I'll do is I'll put a link up top here for you. Upper right-hand corner. I'll hook you up here. Upper right-hand corner. Grab that link that popped up there and take that free trading course, because the strategy I teach in that video series will teach you a stupidly simple trick we use in our members trade room that tells us exactly where the winning trades are waiting for us each day. It's very easy to learn. More importantly, I want to teach you my 4 favorite entry setups so you can time better entries, make a lot more money. Guys, bottom line, the markets are way too good, way too volatile right now not to be making consistent profits. So if you're tired of missing the best entries, if you've lost your confidence in your current trading strategy, again, hit that link that popped up there. Watch that free video course. You will love all the trade examples I include in that short video series. The best part is it's 110% free for you. Also, too, keep in mind, if you can't get the link up top there, I'm going to put all the important links you'll need to learn more about this stuff. I'll put everything down in the description of the YouTube video. Start first with the free video course. Most people start making money on their own just with that free video course. The links will be down there for you. And remember, the place to be each day is in our trade room, 8 o'clock Eastern time. We trade all of our favorite markets. I'll put membership information for you down there for you. And also, I post a ton of charts and videos and mindset stuff on Twitter or X. If you're on Twitter, X, give me a follow. Again, all the details you need to learn more about this stuff and hopefully earn a lot more because of it are linked up in the description of that video. That's where you want to go to learn more, because again, I know a lot of this stuff might be new to folks. I look at things a bit differently here on this YouTube channel. Now, we talked about running lower, trapping the bears in and squeezing stops, right? Running stops, forcing sellers to become buyers and squeeze stops. What if we don't get it? You know, what if we don't get it? There might be so many buyers down here. There could be a ton of sellers taking their profit right at that low, because again, that's unfinished business for the bears. So we may get that strong run down, but we may not get a chance to trap the bears in. It may just whoop and run right back up again. Remember this pattern. Anytime we see a V bottom, the most important thing is have a game plan ready for it, because your emotions, at least for me, are going to play tricks on you and tell you chase after it. When I was a rookie, if I didn't get a good signal, I get so frustrated, I would chase after it and wind up losing money. So you don't want to chase after this. You want to mark a trend line off the high. See that? Bring that trend line down around that low. That's going to create a channel, as you can see here. Now, very simple. Look left. Use one of these prior swings here. And what I want is I want the first touch. The first test is the best test. We always say that in trade room, right? The first test is the best test. Now, this could be any entry pattern we use in the free video course. It could be a bear trap. It could be a seller failure pattern, a pullback combination. If we're lucky, it'll be a strength trade as it rotates, running higher. Again, if you're new here right now, this is a new language, but this will make a lot more sense for the entry tactics I'm talking about once you dive into that free video course. So a V bottom, the hardest part is that voice in your head is going to try to convince you to jump in as it goes higher here. Tell that voice to shut up and let you do your job and follow the game plan I'm laying out right there. That's a V bottom reversal off of that low. Now, what if I'm wrong, right? Or what if this CPI report comes out uber hot, right, for tomorrow? If we get a really big run down, this trading range is going to begin to act for a breakout pullback. All right. So if this thing just torches running lower, I should also mention too, if we do see a range breakout, what almost always happens is the breakout leg creates a measuring leg. Okay. So the breakout leg, measuring leg. It's a bit difficult for me to predict this stuff, of course, the night before, but that is the technique we use, right? The breakout leg is the measuring leg. We saw that yesterday, right? Where it broke out, right? Measuring leg, found that top up there. So first of all, if it does run lower strong, we'll know where the market wants to go because of the breakout leg, measuring leg. That will give us that bottom there. What I want you to be aware of though is, if it really cooks and runs lower here, it's going to want to use the underbelly of that range for a breakout pullback. Okay, here's how we trade that scenario. The first one is that same crown reversal pattern. Now, in this scenario, this becomes a half size trade for me, a quarter size trade, because now you've got all that momentum going against you. So just, be aware of that. This is not the highest percentage trade at this point. What I want you to be aware of though is this will usually create a two-legged pullback going higher. Okay, the crown reversal is the way in which we buy it during that pullback. Again, in this scenario, it's a big move down. Think about now, one leg, two leg. Okay, a two-legged pullback. When I think about a breakout pullback, I think a two-legged pullback, a measured move that goes a bit too far, a little bit more than 100%. Now, at this point, all of that momentum is going to want to run lower and take out that low before we can get that run back up again, right? Makes sense? Okay, so knowing that scenario, what I'll do is wait for that 21 EMA to come up, let the buyers try once, try twice. Now, why twice? Because now I got you trapped, right? Now I know where your pain is. Now I know where your stops are. Now I know where these buyers become sellers, and this will oftentimes just sink right back down to retest that low. If we're lucky, we'll get one of those failure into trap combinations I talk so much about in our trade room, right? Now, at that point, we're now back to retest the low. Think about this now. Anybody who sells up here, where's their profit target? Yeah, back at that low. Is it safe to assume that sellers up here become buyers down here? Is that a good place to sell? Of course not. It's the last place you want to sell. But you know what? I would have sold that all the time when I was a rookie because I couldn't help myself, right? So I know there are a lot of rookies out there that will chase this thing lower. They didn't have the guts to get short right here. They get roped into chasing it going lower. This is that same 1, 2. Again, I'm not going to pick a bottom on this, and don't give me divergence or order flow. I've been around this game way too long. Indicators are not going to give you consistent timing on this. I would talk about that tonight if I thought that made a difference. So 2 tries, run those stops, and the goal, of course, is to run back up and take out that, right, take out that high. These will usually create one bigger range, and of course, we'll talk about that more tomorrow in the trade room, but that is the general idea. Think about that breakout leg, measured leg. Okay, once we take the measured move out, again, half size trade, quarter size trade. Please be careful picking those bottoms after a big move down, right after CPI report, two-legged pullback, retest the low, and then bounce back up from there. Boy, I'm getting goosebumps just talking about this scenario right now. I love this stuff. Hopefully you're enjoying this video as well. So now we know some variations of this going lower, and we're ready for the game plan if it does just bloodbath going lower tomorrow. Now let's talk about going higher, because as we go higher, we have an overall bear market on the 60. But remember, that range right there, it's going to want to rotate. And you know that range. Well, let's go to the NASDAQ right now. I hear you, NASDAQ. I hear he's over here complaining right now. What about me? He's getting lonely. Okay, I'm over to the NASDAQ now. Before we dive into the NASDAQ though, if you're enjoying this stuff right now, please help me grow this channel by hitting that like button, will ya? Subscribe and share this link with other trading buddies, because YouTube, believe it or not, rewards me every time you like, share, and subscribe. I know we're busy right now. I get it. It's January, New Year. I get it. I appreciate you guys spending a few minutes with me, though, every evening here on these videos. So thank you so much for the likes, subscribes, all of the ongoing support. Now, let's get back to business here after I beg for your likes here tonight. Let's get back to business here now on the NASDAQ. It's YouTube, right? I gotta beg for all this stuff. Anyways, back in the NASDAQ right now, you can easily see that breakout pullback we talked about in last night's video. You know that strong move down. It wants to retest that low before we get that run back up into that range overhead here. That's a really big clue. Let's go to the NASDAQ tick chart right now. Upper left-hand corner, again, you'll notice a bit faster time frame than we saw in the S&P and SPY. The S&P is more volume, therefore a higher tick chart. You'll learn that about that stuff inside the free video course. One clue, pop up into a trading range. Ranges love to rotate, right? Ranges love to rotate. Second clue, big move down, big move up, big move down, big move up. You will be amazed how long it took me to learn that tactic. It took me like 10 years to realize that when I see big moves back and forth, there's usually a range coming. Write that down. You're welcome. It will help you avoid losses and help you make money, whether you're a student of mine or not. So there's a good chance there's a range right there. Good chance there's a range right there. It may not be, but it is a good chance there's a range right there. We mentioned earlier, right, that if we go lower, we know we're now under a range right into that big low. So if we run lower, great place for a bear trap, but we have to be careful because of all that bearish momentum. So we talked about the crown reversal pattern. We talked about the double bottom retest pattern. We talked about, of course, the V bottom, whoop, right back up again. And we talked about earlier, oh, that's not what I wanted. We mentioned earlier, right? If we get that bloodbath, right, really cooks going lower, remember it's that breakout leg, measured leg, two-legged pullback, right? Two-legged pullback, retest that low and back up from there. So I don't want to repeat myself too much, but that obviously we mentioned earlier on the S&P. Same thing applies here on the NASDAQ. Now, if we go higher, right? If we go higher, we're either going to walk into the biggest bull trap ever, right? Because again, it's an overall bear market right now on the 60. So this either becomes a huge bull trap up here and rolls back down again. We'll talk about that in a moment. Or this becomes an epic breakout pullback here now, right? Because this range, if we do break out a breakout pullback, now there are a couple different types of breakout pullbacks. I told you earlier, nobody knows what tomorrow will bring. We're going to go through some if-then scenarios tonight. That way we all have a game plan, right, to profit on whatever we get. So first of all, let's talk about this. If this thing begins to rip higher here, we know right now that that range wants to rotate going higher. When I think of the breakout pullback, I think about as we're ripping higher, I want you to look for that separation off the moving average. Whenever we see separation off the moving average, separation equals strength. If we start ripping higher here overnight or after the news comes out tomorrow, or if we run lower and then run higher, that also works too. What I can do now is higher high in price, get right below that low, right? It's always going to be a trap. The trap pattern is always the entry we use whenever we're ripping and during rotation, whenever we're rotating from one side of the range to the other. Now remember I said earlier, the breakout leg is the measuring leg, right? So breakout leg, measuring leg, that becomes our target. Now, at this point now, very convincing breakout, that big range above us on the hourly chart. Think about that range now for a breakout pullback. When I think about a breakout pullback, the first thing that comes to mind, there's two of them. First one is that two-legged pullback. Think about a measured move. One leg, two leg. That will give us the general area. If we're lucky, it'll combine right around those prior highs out there. Mwah, that's a gorgeous spot for a breakout pullback. Now, as always, I'm not going to blindly buy that because it may roll over. We'll talk about that in a moment. What I'd love to do, though, is with all of that momentum, the buyers want to retest that high. We'll wait for the pullback to the moving average. Let those bears try twice. Why twice? Because again, I want their stops. I'm going to use that same failure into trap combination we talk so much about on these videos. And we know one thing's for sure. Target goes back up to retest the high. And then we wait and see what happens from there. Buyers may stall 1, 2, and back down again because it's overall bearish on the hourly. It may keep on popping and running higher. We'll cross that bridge once we get there. But that is the breakout pullback scenario number 1. I have one more breakout pullback we'll talk about in a moment, but let's get real here. We're an overall bear market. What if I run higher and we don't? Remember, if you go higher and we start seeing separation and a higher high in price, that is a clear giveaway, at least in my eyes, for a buy, right? Going higher. But if we run up here and we pull back and these buyers come in and they're not getting anywhere, they're trying once, going lower, trying twice. I mentioned earlier that crown reversal bears once, bears twice. It's a higher high and a move right below that low. Again, it's a bear trap. It's a crown reversal off the low. This is the same pattern. It's just flipped right overhead. So that's all it is, right? It's flipped upside down. It's a lower low in price. Why lower lows? Because buyers want to buy low. So as they're pulling back, buyers are in. More buyers are in. Now their stop's sitting right there. On this pattern though, I want to get above that prior high. It's a safer trade. It's a more consistent trade. And in that situation, it's very bullish right now. It's going to rotate up the low. It needs to be a crown reversal in my opinion. So strong red candle, closing back below the moving average, and we're dumping back down into that range. A lot of times what happens is we'll run up, buyers get trapped up here, crown reversal pattern. As it dumps off that high, we stack them up, right? We stack them up. We stack up the traps, right? Same pattern, this exact same pattern. Remember, in the trade room, right, it's always failures at the edges and traps as it rotates, right? Failures at the edges, traps as it rotates. I'm getting a bit sloppy there on the drawing, right? So crown reversal, bull trap as we go higher here. We're watching for that tomorrow morning. And don't forget, it runs up, gets whacked back down again, starts grinding down. We may run up. We may not get that crown reversal up here. There might be so many bears up there, it just gets whacked back down again, and we never get a chance to do it, right? So we whack back down, V-top, grinds down. These, in all reality, are easier because now momentum's already turned for us. We mark off that low, we mark off that high, right? Find the channel, we find one of these prior swings, and as always, first test is the best test off of that high, right? Remember, this range below us is going to want to rotate, right? Back and forth as we go here. I like that trade, that V-top reversal. It's not my favorite, but it's a good trade. It's easier on the emotions because at this situation, you've already got that momentum turning over, right? It's much easier. For most new traders, that's a much easier short than to try to pick that top, right, on that crown reversal because you're going against momentum in that scenario. Hope that makes sense. Okay, one final variation. We're running late here on the video, so thank you so much for watching all the way through this here tonight. Pop and grind. Oftentimes when news events happen, we get a big breakout and we start grinding. Now, hopefully by now you know how to trade these. We mark off the highs. We find a big old channel right off of that low. We do not chase after it. Now remember, when it grinds, whenever a market grinds in one direction, be very careful trying to pick a top on this. You'll get lots of really good short signals, but in my experience, if we ever get a market that pops and grinds, either up or down, I don't try to pick that, in this case, pick that top. What I'll do is I'm gonna wait now. Whenever markets grind away from that 21 EMA, for whatever reason, it's very difficult to stop that momentum. What I'll do is once again, find that channel, look left, and there are lots of ways in which we can buy this. My favorite way to do it is to get underneath the prior swing, combine that off that channel, bear trap is showing you here, seller failure, pullback combination. Again, you'll learn more examples of that inside that free video course. All right, folks, that's the game plan for tomorrow now. We talked about going lower, right? How to buy it and how to sell it. We've talked about going higher, right? How to sell it here and how to buy it. Now we get a good night's sleep, Come back tomorrow, watch the fireworks, the CPI tomorrow, and we'll trade whatever scenario that we get. Now, speaking of tomorrow, the place to be, 8 o'clock Eastern time in our trade room. We'll have a front row seat tomorrow morning for that CPI report. Once again, I'm going to put all the important links you'll need to learn more. I'll put them all in the description of this video. Start first with the free video course. You're going to love all the trade examples everyone does. And then come join us in our trade room and we'll do it together every morning at the opening bell. In the meantime, be well out there. Be nice to each other, will ya? And you better be here next time. Adios, amigos. Bye for now.